to come to the markup method, right? So to even look at the markup method, I must teach you the difference between markup and margin. So you see, we have profit as a percentage, okay? So you know profit itself can be in monetary terms, Ghana cedi. Do you know that? So your profit can actually be in what? Monetary terms, which is Ghana cedi. Let's say I made profit of what? 30,000. Do you get it? Or my profit can be a percentage. Is it that somebody's hand? Yeah, Musa, your hand is up. Musa, your hand is up.
Yeah, Prof. Yeah. I wanted to find out on the other side. Let's say that Amma have a shop in Kumasi, and Amma have actually, let's say the amount that Amma incurred as an is say 30,000, and Amma have actually make a income of 350,000, and this income is actually reported to GRE.
Okay.
And during the tax audit, they realized that the internal controls relating Amma business is not strong, and then they use the network. And they realized that Amma have actually received. Please, Prof, can you hear me?
Yeah, I can hear you.
Yeah, Amma have actually received money through her bank, totaling 400,000, which exceeded the income reported to GR was initially.
Yeah, I'm listening.
Which was initially 350 rather. So in that case,
Musa, you are awful. Okay, let's continue if he comes back. Somebody is using two devices. Please kindly mute the other one.
Yeah, so Prof.
Yes,
Prof.
please. Yes, boss.
Yeah. So in that instances, if Amma is unable to explain the sources of the total amount that she received through the bank, or that was credited, amounted to 400,000. In that particular case, what would the GRA do?
That's when they use this method.
I also say that they have and they declare. Come again?
No, they have to use this method to confirm first. Do you understand? So that's where most audits always start with your bank statement. So we would have taken a man's bank statement and see all the debits against all the credits. Do you get it? And say that, okay, the assumption is that all the debits are what? Expenses. All the credits are savings or incomes that came, right? So it is either most of the income was taken from that credit, most of the debit came from that credit, and some other expenditures as well. So when we add them up, and we see that it doesn't total the declared income that Amma gave us. It means that Amma has under-declared something. That is only when we can confirm an under-declaration. We can't just say your controls are weak, so there's an under-declaration. No, it doesn't work like that. That's why we are learning these methods. Musa, is that okay?
Yes, please. Yes, please.
Good. So now let's look at something. Profit can be in Ghana cedis. Do you all agree? And profit can also be a percentage. Do you all agree? So for instance, if I tell you that I made profit of 30% out of an income of 300,000, right? That means that this one is what? 10%, true or false? Can you see that? True or false? Now, this profit percentage we have gotten can either be that this 30,000 profit we made was either on the cost of the thing. So it was either the profit as a percentage of the total cost, okay, or it was the profit as a percentage of the total what? Sales or total revenue. Does it make sense? Now, if profit is as a percentage of total cost, we call it a markup. Can you see that? And if profit is a percentage of revenue or sales, we call it what? A margin. Does it make sense?
Yeah.
Good. So we have the profit equation that says cost plus profit is always equal to what? Selling price or sales. Do you all agree?
Hello, Prof, please, can you come again? Sorry.
Can you come again with what you just said?
Profit can be Ghana cedi. Say when you have 30,000 meboa. But I'm telling you, say, we got profit of what? 30,000 over what? 300,000. Now, this 300,000 can either be sales, you are getting the profit as a percentage of sales, or you are getting profit as a percentage of what? Income. If the profit is as a percentage of cost, we call it a markup. Okay? That percentage is called a markup. When you took the profit as a percentage, that means profit over sales, it becomes a margin. Does it make sense? Are you clear now?
Yes, please. I'm clear now.
Good.
Thank you.
So a markup means that you took it as a percentage of cost. Margin means you took it as a percentage of revenue. So if you are saying that, okay, I need markup, markup means that the base is cost, right? The base is always 100%. So markup means that cost is equal to what? 100%. Do you all agree? Do you all get it?
Yeah.
I said markup means cost is equal to what?
100%.
100%. So that means that if I tell you that I want to make a markup of what 10% on a product, that means the cost is 100, right? So that means this 10% is on this 100. So that means the selling price should be what? 110%. Do you all agree? So this is how markup works. But if we say margin, you still put this same thing down, but with margin, it's rather the selling price that we did, right? So with margin, it means the selling price is rather 100. So if I want to make a margin of, let's say, 20%, margin, into 20%, into a cost be 80. Does it make sense? So margin, we need the selling price, or the selling price is the 100, right? So margin selling price or sales is 100%. It means everything is on the sales. Markup is cost plus, meaning everything is on what? The cost. That's the only thing you need to know. And based on this, you can find any missing figure. That's how easy this is. That's all about markup and margin. The old way, you have to convert markup margin to markup before you use it, is a cake. Don't do that. So markup and margin is just profit percentages. I told you when it is based on cost, we call it what?
Markup.
Markup. That means you have marked it up. Margin means it's a margin on the sales. It's a percentage on the sales. Do you understand? So this is all you need to know. Now, based on this, you can use it to get all the types of missing figures. Now, let me give you a proper question, even though it's not here. All right. So I'm just going to put down some rough data and let's see something, whether this thing makes sense. So now, they tell us that ABC Limited, okay, makes, let's say he made taxable what? Supplies, okay, of, let's say 500,000 Ghana cedis. Okay, there's a taxable supplies that he made during the period. Okay, and then he paid VAT and levies. Okay, I'm just saying he paid VAT and levies of 10,000 Ghana cedis, or let's say 100. He has paid VAT and levies of let's say 60,000 cedis, right? Due to input of, let's say, input tax of 40,000. Okay, so GRA is not convinced. GRA is not convinced. Are you getting it? With his input taxes, right? His input taxes of 40,000 cedis. Do you get it? So you know 500,000 now. VAT is 20%, right? Let's look at the markup method. Now that you understand markup, let's try on an actual question. So somebody has paid VAT. He made income of what? 500,000, and he has paid VAT and levies of 60,000 because of input of 40,000. You know the VAT should have been what? 20%. As of now, VAT is 20%, right? Applied straight on the what? The income, right? So 20% of the 500,000 should have given us 100,000, right? But he said he has input of what? 40,000. Can you see that? So let's say that the business's closing stock is let's say 30% of sales Okay, so this is what we have, and they are telling us that this guy GRA is not convinced with the input of 40,000, the input taxes of 40,000. He makes a markup of 30% on its cost. Are you getting it? Okay, let's make it a margin. Let's just make it a margin. Okay, it doesn't matter. Margin or markup, we can still do it. So this guy makes a what? A markup of 30% on its cost, and stock at the start of the year amounted to 85,000. Stock at the start of the year, what is it? Is it opening or closing stock? Stock at the start of the year, is it opening or closing stock?
Opening.
It's opening.
Stock. And then closing stock, they said is 30% of his sales, right? Okay, so based on this, GRA is not convinced with the 40,000 taxes that he said he paid on his purchases. So what do we have to do? We have to establish our relationship first using, so there's some sort of incomplete record, right? We know input taxes are taxes on what? On purchases. So we are saying that if we take our VAT account, okay, our VAT control account, we need our output tax. Are you getting it? Which is what? The 20% on the sales of 500,000, right? Do you get it? So that should have been 100,000. Do you all agree? Do you all agree? Then
Yes, please.
there's what we call our input taxes, our deductible input taxes. So not all input taxes can be claimed, and that's what we are going to learn. So we learn our deductible input taxes, and they are saying that they what? They spent 40,000, not so, or they had tax of 40,000, so they ended up with 60,000, which was what? Paid to the GRA. Can you see that? So this is what they ended up paying to GRA. Okay, that's not bad. If this is what you have paid to GRA said that they don't agree with this 40,000 because this 40,000 doesn't look real to them. So how do we establish this? We have to use all the data that was given. So first of all, we know that in a typical company's P&L, right? How does the P&L look like? It starts with sales. Not so. It starts with sales. True or false? And here he's saying that his sales was 500,000. Then we less what? After sales, we less what? Cost of
sales.
Cost of sales. Okay. Now this guy's cost of sales we don't know, but we said he had opening stock of how much? How much was the opening stock? Let's go and check. Opening stock at the start of the year was what? 85,000, right? 85,000. Then we would have added what? Purchases. True or false? Then we less closing stock. Closing stock was what percentage of sales?
30%.
So we take 30% off the 500,000, and that gives us 35. That's about what? 150,000, right? Is it 150? Is it 150?
Yes, sir, 150.
Yes,
Okay.
yes, sir.
So that therefore gives us what? The closing what? The cost of sales, right? Okay, good. That gives us the cost of sales, and then we can now get what? Our profit or our gross profit. Now, this one, we are not really concerned about the profit. We are concerned about the purchases because we know that the VAT is on the purchases, right? So how can we find the purchases? We have to use the markup. That's how the markup method works. Can you see that? So they said he makes a markup of what? He makes a markup of what?
30%.
Yes, he makes a markup of 30%. We said markup is a percentage of cost or sales. It's a percentage of what?
Cost.
Cost. Okay, here we don't know the cost itself, right? But we know that, okay, if cost plus profit equals what? Selling price. Are you getting it? And then we are saying that markup, anytime you hear markup, that means cost is what? 100. So I'm going to put 100 here. They say he makes 30%. That means sales should be equivalent to what? 130. Do you all agree?
130.
And the sales now, we know this was 500,000 in Ghana cedi. So this in percentage terms. This is 500,000 in Ghana cedi terms. This one too is in percentage terms, right? But we don't know its Ghana cedi equivalent. This one too, we don't know its Ghana cedi equivalent. Do you get it? But we can find it once we know one using ratio and proportion. So I always make it very simple. We know that we need the cost, right, to get the purchases. So we are saying that if our sales, are you getting it? Which was what? 130% was equivalent to 500,000. Do you all agree? Then the cost of sales, which was equivalent to 100, is what? We don't know. So this is my rule. The one you are finding is always on top. What did I say? The one you are finding is always on
So
top. The one you are finding is always on top. What did I say?
the one you are finding is always on top.
Which one are we finding? We are finding the 100. So to get the cost of sales, it means that you are going to put this 100 on top over the 130 times the 500,000. That's all, right? This is the same as if less more divides, but I don't want it that way. The one you are finding is always on top. If less more divides doesn't work for indirect proportion, you'll be wrong. But the one you are finding is always on top, works for both direct and indirect proportion. So 100 over 130 times our 500,000 means our cost of sales would have been what? 384 615. Let's ignore the decimals. But decimals, I may ignore exam more because GRA 4J coins. So Nimza. GRA 4J coins, so don't ignore the decimals in exam. This one is not exam. So now we have proven our cost of sales to be what? 384,615. True or false? You see, we've gotten it. Good. Now you are saying that 85,000 plus some purchases, are you getting it? Minus 150,000 should have given us this 384,615. So you can create an equation for it and say that what? Our opening stock, are you getting it? Our opening stock plus what? Plus our purchases. Do you all agree? Minus our closing stock should have given us what? Our cost of sales. Meboa. True or false? So we know our opening stock was 85,000. But do we know our purchases? We don't know. But we know our closing stock. We had what? What was the closing stock? 150,000. No be so. All came to give us 384 what? 61 what? 5. Not so. Not so.
Yeah.
So in that case, we can work P out.
Yep.
All right. So let's work P out. So if I decide to put P here, all this must go there. So it means that P now becomes our 384,615 minus what? 85,000 plus what? The 150,000. So P is equivalent to how much? P gives us how much?
449.
449.
615.3.
Somebody's using two equipment. Okay, so now we have the purchases, right? So that means that the VAT on purchases should have been what? That's 20% off the 449,615, and that gives us what? 92 times 5. Okay, so 89,923. Okay, so 89,923. So it means that this guy actually paid. He actually incurred more than expected, right? So he has actually over declared. Do you know that? He has actually under declared his purchases, so he paid more VAT. But in this case, GRA will not worry you because you are paying more. So what was his correct VAT to be paid? Assuming his sales was correct, his correct VAT would have been what? The output tax. What was his output tax? That's 20% of what? The 500,000 also, which was how much? The 100,000 minus what? The input tax corrected. This is what we call recomputation in audit. Okay, that's 20% of the 449,615, and we had what? 89,923. So what's the VAT that he should pay?
10077.
077. Okay, so there is the net what? VAT what? Payable. Are you getting it? But here lies the case. He has already paid what? So what's the credit that we are going to give? Or the refund? He's supposed to get a refund of how much? You know, before he paid what? He paid VAT of what? 40,000. Or
60.
Yeah.
he paid VAT of 60,000, but he's actually supposed to pay 10,000. So if we set this off against the 60,000, it means that he should pay net of how much? Net credit. Are you getting it?
49,923.
So net credit from GRA, right? 49,
923.
923, right? Okay. So what conclusion are you going to get? Or in your report, let's write a report to our audit manager. So in our report, we are going to say what? Report to who? It can be a memo to audit manager. And then from what? Maybe audit senior. Then you bring the date, 30th July 2026. Then your subject, right? Audit. Or instead of audit, we can say recomputation of VAT for ABC Limited, right? So recomputation of VAT. Are you getting it? For what? I'm also teaching you how to write this. Most of your questions take that form. I hope you are all following. Are you getting it? So based on audit, are you getting it? For the VAT paid, are you getting it? By ABC Limited, are you getting it? ABC Limited, we have come out, are you getting it? We have come out with, or I have come up with the following what? The following analysis, okay? The following analysis and observations, right? With all detailed calculations in the appendix attached, right? With all calculations in the attached appendix. Do you get it? So the appendix was actually the calculations that we did at the top there. Do you get it? So all these calculations we did, we could have called it what? The appendix. Do you all agree? Does it make sense? So the appendix, this will be note 1. Then the P&L will be the note what? Then note 2. Then the determination of the purchases will be what? Our what? Maybe note 3. Let me start here. Yes. Maybe the determination of the purchases will be our note 3. Then finally the correct VAT will be our what? Our note 4, right? Do you get it? Then you come to findings and observations, right? So this is like our introduction. So findings and observations. So you can say findings and what? And observations. Right? Based on our recomputation. Are you getting it? In the appendix. So you can reference the appendix from note what? Note 1 to what? To 3. Are you getting it? ABC Limited's purchases, are you getting it? Have actually what? Have actually exceeded what? Exceeded the earlier declared purchases of what? Declared purchases of how much? His declared purchases was how much before? 40,000. Hey.
Is input tax, not purchases.
No, first I'm talking about the purchases. It's the purchases that led to the input tax. So you calculate purchases now and sana. Into the purchase now saying.
And then we have to gross up the 40,000.
No, the gross
We don't
the
know the purchases
40,000.
figure.
The 40,000 would have been 20% of something.
Yes,
right?
So that's what I'm saying. We have to gross up the 40,000 to know the purchases per.
Definitely. So 40,000 divided by 0.2 give us how much? 0.2. That means you should have given us 200,000, right? Declared purchases of 200.
Yeah, it's 200,000.
Yes. So you are saying that per the earlier declared purchases of 200,000, right? This was ignored. Are you getting it? This was ignored, and an actual purchase of what? How much was the new purchases that we had? 3 something.
3 something.
It was 449. The new purchases. It was 449,615, right? So the new actual purchase of 449,615 based on our this thing was used, right? Was used in the computation, right? Then the next heading can be what? Corrected VAT. Are you getting it? So ABC actually over declared, right? Or overpaid VAT. Are you getting it? And thus must get a credit. Are you getting it? As per required under the law, right? Required under the law. The procedure he's going to go through would be under Section 50 of the VAT Act or something like that. Okay, because you're already referencing the appendix, you don't need to write any figure if you don't want to, because it's already in the appendix. You see how they tell you to write a report. And this small question you see like this is a full 20 marker. Can you see that? How was the question? It was a good exercise, eh? Can we move?
Sir,
Yes, please.
sir, will you
Yes.
share the solution?
You want the solution?
Yeah. Please.
Okay. I hear you. I'll share the solution.
Thank you.
All right. So let me just save it so that I don't forget. I'm coming. Let me save it so that I don't forget. But as of now, do you understand it?
Sir, yes, I understand, but it needs further practice.
Okay. Monday is just around the corner.
Yeah, so.
But you've learned all these things. This is just a refresher. Oh? Anna. I believe you should have learned all this. All right. So that was how we do the markup. Let's take another one. Now, Kofi owns a supermarket in Tadi. According to industry data, supermarkets in Ghana apply what? A 25% markup on their cost of goods sold, right? Kofi's records show that his cost of goods sold for the year is 800,000. And he has reported gross receipt of 950. The GRA suspects underreporting of income and decides to use the markup method to verify the accuracy of Kofi's reported gross receipt. Please, can we try this? Now that you get the whole idea, now you are a full-fledged auditor. Can we try this example? So the arm's length markup that companies in the supermarket industry use are what? How much is the arm's length markup?
Recording.
Somebody said, respectfully, is this topic treated under CIT or ICA? This is not an ICA class. Oh. This CIT. Who's using the two devices? Please, if you are using two devices, just lower the volume on one. Otherwise, it will give feedback. Sound travels faster. So if you are using two devices, would you lower volume or don't put it off. You just lower the volume. Is that okay? Please, this is not a ICA class. Oh, it looks ICA. This is tax audit. I beg you. If you don't know this is in tax audit, then I'm sorry it is. These are the areas of tax audit that has been ignored but they always come. So you just need to prepare, right? I'm teaching you all the calculations that come in tax audit. Okay, good. So Kofi owns a supermarket in Takrade. We have seen that. So according to industry, that supermarkets make a what? A markup of how much? Supermarkets make an arm's length markup of how much? Meaning supermarkets in the area on the average, how much do they make? We said they make markup of 25%. True or false? True or false?
True.
on their cost of sales. And he reported Kofi's cost of sales was how much? Kofi's cost of sales was how much?
800,000.
800,000, right? And his revenue reported was how much? His gross receipts, which was his revenue reported, was how much?
950.
950,000.
Okay, so that means he has reported revenue of what? 950,000. Good. So if he has reported 950, so if we apply this profit on his cost of sales, we should get the same 950. Mebwa. Because cost plus profit equals selling price. True or false? True or false?
True.
So if we said this is markup, we are using markup, and then cost is 100, profit we are saying they make 25, then sales should be equivalent to what? 125. Mebwa.
Mm-hmm.
So his sales or gross receipt should have been what? 125 out of the 100. What you are finding is always on top, times the 800,000. This should have given us how much? 1.25 times 800,000. Wow.
1 million.
He should have made 1 million as his sales, but how much was declared?
950.
950,000. Is Kofi being a good boy? You're a very bad boy. You're a bad boy. Kofi is a bad boy. Mebwa. Is Kofi not a bad boy? Is he not a bad boy?
He's a semi-good boy.
Why semi? Is that semi? He's good or bad? Kofi is a bad boy. He has underdeclared 50,000 based on the circumstantial evidence we have come up with. Does it make sense?
Mm.
So based on the industry standard markup of 25%, Kofi's gross receipt should be around 1 million. However, he has reported only 950, indicating a shortfall of 1 million, 50,000. Kofi may have underreported 50,000 gross receipt based on the markup method. So this is all about the markup. And markup is used everywhere. You just have to be familiar with how it is done. Richmond, do see what you go. We chip it from.
Me de anya mechi nkwa o me yam niam nyina gu abonten.
Oh, Joyce, I don't know. But I hope it makes sense. Can we proceed? Can we proceed? Now you understand the
Yes,
markup method, right?
Yes,
Okay, now let's go to unit and volume method. This one, you've been doing it in your own house, right? But you don't know that's what we call it. Okay, so I need somebody to explain the markup method for me in your own words. Then we move to the unit and volume. Based on this, I'm going to teach you how to deal with control account. Then we start solving huge past questions before we start looking at VAT and customs and the rest. We'll still use all those techniques. So, yes, please. So the markup method, where we use an appropriate markup, apply it on what our costs are getting it to determine the gross receipts. That's all. Makes sense. So when it comes to unit and volume method, in many instances, our gross receipts may be determined or verified by applying the sales price to the volume of the business done by the taxpayer. And mostly people who sell what we call fungible goods. Look, let me explain fungible goods. If I go and buy milk, carton of milk today, and I buy second one tomorrow, can you distinguish between the two of them? If I buy carton of Ideal milk today and tomorrow I go and buy the same carton of Ideal milk, can you distinguish between any of them? They all look the same, right?
Yes, sir.
That is where people can steal a lot of money. I mean, I don't have to teach you that in this class, but anyway, I'll have a class on money laundering and fraud detection sometime later when you are done with your CIT, right? But for now, let's just focus on this. Now, this is based on what the volume of the business. So the number of units or volume of the business done by the taxpayer may be determined from the taxpayer's books, as the records and the examination may be adequate, I get as to the cost of goods sold or the expenses. Let's explain what we mean. Let's take an example. A fuel station in Tema, Comty 7, okay, they sell diesel fuel for 8 cedis per liter. And their purchase records show that they bought 100,000 liters of diesel during the year. So if they reported 100,000 liters of diesel, that means they should have what? Sold that 100,000 of liters, right? So the owner reported gross receipts of 750 for the diesel sales. The GRA is using the unit and volume method to verify the reported income. Who sell diesel not on the same? How much did he sell? He sells his diesel. Is it not 100,000? So he bought those from the tankers and he's selling it for what? 750,000. Assuming he sells it for 8. Then 8 by the 100,000, shouldn't it be 800,000? Shouldn't it be 800,000?
Yeah.
But he reported 750. I just said Nechi Guho 50,000. Are you getting it? And this thing, I don't want to go really into details because they are not going to give you a deep question. There will just be inconsistency among the pricing and the units. That's all. So the units that he failed to declare, if we work it out and get his purchase records, his bank statement to work it out from the suppliers through an external confirmation, we can see that he bought 100,000. Multiply by the 800, but he declared 750. It means that he didn't declare what? 50. Are we okay? Makes sense, right? So GRA could conclude that the fuel station is also under reporting income by 50,000 in their gross receipts. Is that clear?
Sure.
Makes sense.
Yes, sir.
So far, how many methods have we learned so far before we go to the boss himself? Net worth. How many methods have we looked at so far?
4.
Mention them. Please be making small notes. Oh.
Unit and volume,
Unit and volume.
markup,
Markup.
source and application,
Source of fund and application. Yes.
bank deposit and cash expenditure.
Bank deposit and cash expenditure. Thank you.